Almost every indicator you love is trash. Except one. Your chart? Yeah, it looks like a Christmas tree. You've got RSI on the bottom, MACD underneath that, Bollinger Bands squeezing everything, moving averages crossing over each other like the branches of your family tree, and somehow you still lost money this week. Weird how that works. Every one of those indicators is doing math on the same input, price. RSI takes price and runs a momentum formula on it. MACD takes two moving averages of price and measures the distance between them. Bollinger Bands, they take price and wrap a standard deviation envelope around it. You're not getting three opinions. You're getting one opinion dressed up in three outfits. And that opinion is already late because price is the last thing that moves. Now, try to keep up. RSI says a stock is oversold at 30. Cool, you buy the dip. It keeps dipping to 15. RSI didn't lie. It just told you what already happened and you treated it like a prediction. Good job. MACD crosses bullish. You enter. Price chops sideways for 2 weeks and the cross reverses. Basically, it's a coin flip with extra steps, not a signal. Bollinger Bands tighten and you get excited like when your sister's been drinking too much again. It squeezes, downward, into your face. None of these tools are broken. They did exactly what they're designed to do. The problem is, what they're designed to do is describe the past, and you're using them to trade the future. There's one thing on your chart that isn't calculated from price. It doesn't lag, it doesn't smooth, and it doesn't cross over or squeeze or oscillate. It just tells you the truth in real time. Volume. Now don't get your panties in a wad. Hear me out. Volume is how many shares are actually being traded in the moment and traded for the day. Not a formula. It's the raw count of how many people put real money on the table during that candle. And that number tells you things. Price never will. Look, when a stock breaks above resistance on 10 times its average volume, that's real. Real buyers showed up. Institutions moved. That breakout has weight behind it. When a stock breaks above resistance on half its average volume, like your last girlfriend, it's a trap. Nobody showed up. The move has no conviction and it's going to fade back below that line and take your money with it. This is the single most important concept in reading volume. Relative volume, not the raw number. 5 million shares means absolutely nothing by itself. If a stock averages 50 million shares a day, 5 million is a ghost town. If a stock averages 200,000 shares a day, 5 million is a 4-alarm fire. Context is everything. You need to know what normal looks like before you can spot abnormal. Now this is where it gets interesting. What does it mean when volume spikes but price goes nowhere? Big green bar on the volume chart, candle barely moves. That's accumulation. Someone almost as large as your mother is buying a position slowly enough to not push the price up. They want shares at this level and they don't want you to know about it yet. By the time the price moves, they're already loaded. You're not early. You're the exit liquidity. Now flip it. Price is moving up on a nice clean uptrend. Looks healthy. But every day, every hour, volume is shrinking. Fewer and fewer people are participating in this rally. When volume dries up during an upward price move, the move is dying. The reversal is coming and it's going to be almost as fast as my ex-wife is to play the victim. It's not strength, it's a trap. There's no buyers left to cushion it, and that trap is the nastiest one. Stock crashes 30% on massive volume. Next day, it bounces 10%. You think the bottom is in, you buy the bounce. Check the volume on that bounce. If it's a fraction of the sell-off volume, it's not a recovery, that's a dead cat. The selling pressure exhausted itself for one session and a few bargain hunters stepped in. The real sellers are still sitting above you waiting to unload on you like you're their special sock. 3 patterns, that's all you need. High volume plus price movement equals real. High volume plus no price movement equals someone is loading or unloading. Low volume plus price movement equals fake. Delete half the indicators on your chart. You don't need 4 ways to look at yesterday. You need 1 way to see what's happening right now so you can make a better guess about what'll happen tomorrow. Add a volume bar. Learn what normal looks like for one stock first. Then, when abnormal shows up, you won't miss it and you'll know what to do. That's the entire edge. Everyone else is staring at squiggly lines, arguing about whether RSI is better at 14 or 21. Meanwhile, volume is sitting right there in plain sight, telling you exactly who showed up, and more importantly, who didn't. It's the only honest thing on your screen. Well, that and your search history. Look, is this perfect? No. Is this better than 95% of what you have been doing? Yes. If you really want to know how many people are in the room, do you guess or do you open the door and look in? It really is that simple. Will this make your father finally tell you he's proud of you for the first time? No, but it will help you make or at least lose less money. Now, if you'll excuse me, I have to go find my special sock.